So today I'm going to show you how you can identify strong supply and demand zones in your trading analysis. Hey guys, welcome back. So today in this video I'm going to show you how you can identify and detect strong supply and demand zones. We have already made a video on supply and demand zones in which we have discussed in detail about different types of supply and demand zones and how you can detect them. But today we're going to add a confluence and we're going to see how you can identify strong supply and demand zones. So without any further ado, let's get started. So here we have a demand zone. That is basically a base rally demand zone. Okay, and we can see that this demand zone is forming here, in which price is going up, then there is a range, and then after that price is going up again. So this is basically a base rally demand zone. So now how we can say if it's a strong demand zone or a weak demand zone? In order to detect or in order to identify if this demand zone or weak or strong, we need to see if the price comes back to this demand zone. Okay, and how much time does the price take to come back to this demand zone? Because after the formation of this demand zone, the institutions will put their pending orders. Okay, they will place their pending orders at this zone. So the earlier the price comes back to pick those pending orders, the more strong that demand zone is. And here we can see that this is basically a strong demand zone, because we can see just after the formation of base rally demand zone, the price came back and here picked the pending orders placed by the institutional traders, and then it went up. Okay, it continued in the direction. So this is basically how a strong demand zone looks. Okay, and now let me show you what a weak demand zone is. So here we can see that this is a similar type of demand zone forming here, and this is also a base rally demand zone. So in the strong demand zone, the price comes back to the demand zone right after the formation. Okay, as soon as the demand zone is formed, the price comes back to it in order to pick the pending orders, and that zone is basically a strong demand zone. But in weak demand zone, what happens is price comes back to the demand zone after a long time. Okay, after a while, it doesn't come back to demand zone right after its formation. So here we can see that the formation of demand zone, that is basically a base rally demand zone, and then what happened is price kept moving above the zone. Okay, it didn't come back, and it did came back, but it did that after a long time. Okay, we can see that the price kept moving here above the zone, and then after a while it came back. And this is basically a weak demand zone. So in strong zone, the price came back to the demand zone right after the formation of the zone. Okay, here we can see that it came back right after the formation. But in weak demand zone, the price came back to the zone after a long time, after moving for a while above the zone. So this is the main differentiation between the strong demand zone and the weak demand zone. So now let's see how you can differentiate the strong supply zone from a weak supply zone. Okay, and here we can see that this is supply zone forming, which is basically a base drop supply zone. And similar manner, just as we saw in the demand zone, the similar is the case with the supply zones. Okay, after the formation of the supply zone, if the price comes back to the supply zone as early as possible, then it is a strong supply zone. Okay, and if price takes some time and keeps moving below the zone and then goes back to that supply zone after a while, then it's a weak supply zone. Okay, and we can see that here this is an illustration of a strong supply zone, where the price went up in order to pick the pending orders placed by the institutions right after the formation of zone. So this is a strong supply zone. And here we can see that the price continued moving below the zone for a while and then went back. Okay, and after that it picked the pending orders and then it continued in direction of trend. And now let me explain what is the logic between the strong and weak zones. Okay, so the logic is that if the price is coming back to that zone right after its formation, that means that the zone is strong because the orders are getting fulfilled right after its formation. The institutional orders are getting fulfilled. So in a demand zone, price goes back and picks the pending order. Okay, and in a supply zone, in a strong supply zone, the price goes up after its formation and then picks the pending orders by institutions and then continues in the direction of trend. But in a weak zone, the right after its formation, the price continues to move above the zone. Okay, it does not come back. And in case of weak zones, what traders are going to do is they're not going to keep their pending orders in place for a long time. Okay, if they're not fulfilled, they're going to delete those pending orders. So when the price comes back to the zone after a while or after a long time, it has become very weak. Okay, and that's the logic behind how we can differentiate between strong and weak zones. So now let me go through examples so that you can understand it completely. So here we can see the formation of a demand zone, which is basically a rally base rally demand zone. Okay, and we can see that this is a big candle, which is basically a rally candle, and then these are the base candles, and after it there is a formation of another rally candle. So this is a demand zone, and we can see that the price came back right after it. The next candle is going downwards, okay, in order to pick the pending orders that were placed by the institutions. And as soon as it fulfills those orders, it continues to move in the direction of bullish trend. So this is a strong demand zone. Okay, so now let me show you an example of a weak demand zone. Okay, and here let me zoom in, and here we can see that the similar type of demand zone, that is basically a rally base rally demand zone, and we can see the price did not come back to the zone to pick the pending orders. It continued to move in the direction of trend above the zone, and it did come back after a while. So when it did not come back to the zone for a long time, the zone became weaker and weaker, and we can see that when it did come back to the zone, the price just went below. Okay, it started moving in the bearish direction. So let me show you another example of a weak demand zone. Okay, so here we can see the formation of drop base rally demand zone, and here too we can see that the price did not come back to the zone right after its formation. It took a while. Okay, and when it did come back, we can see that it took a long time because the price continued moving above the zone. So this is a weak demand zone. So let me just repeat what we have discussed in this video, and let me just go here. So we have discussed how you can identify strong and weak demand zones. Okay, how you can differentiate between strong and weak zones, and we saw that if the price comes back to a zone right after its formation, then it is a strong zone. But if the price takes a long time to come back to that zone, then it is a weak zone. So I hope you like this video. So if you have any questions, please comment down below and I would love to answer them. Also, you can join our free Telegram group in which we share forex trading knowledge for free. Also, don't forget to subscribe to our channel so that you'll be the first one to not be notified whenever we upload new content. And you can also visit our website www.forexbee.co in order to learn more about forex and price action. See you guys in the next video. Thank you.